Hey everyone, welcome back to Corporate Decoder, the place where we break down complicated financial reports into simple, digestible insights. Today we're diving deep into Cisco's latest annual report, and let me tell you, they have some interesting things going on with AI and a huge acquisition that's really shaking things up. Alright, so Cisco, as you know, is a giant in networking and security, and they're really pushing hard into artificial intelligence, integrating it across their products. Like networking, security, collaboration, and observability, they're talking about connecting everything securely and making technology work better for their customers. Their main focus areas are building modern infrastructure, protecting against cyber threats, and harnessing the power of AI and data. They're aiming for what they call AI-ready data centers and future-proofed workplaces with digital resilience at the core of it all. Their networking business is still their bread and butter, the big guy with switching, routing, and wireless. But they're seeing declines in servers and campus switching. Interestingly, they've launched new switches that are AI ready, built on their Cisco Silicon One architecture, promising quantum-resistant security, and post-quantum cryptography sounds pretty advanced, right? Now, their security business is growing like crazy, up 59% year over year. A big chunk of that success is thanks to their acquisition of Splunk, a cybersecurity and observability leader. This acquisition is really bolstering their threat intelligence detection and response capabilities. Collaboration through their WebEx suite is seeing modest growth, up just 1%, which is pretty flat given the market. We'll have to see how AI impacts this area going forward. Observability is another area showing strong growth, up 26%, again a significant boost coming from Splunk. They're improving visibility across networks, applications, and multi-cloud infrastructures. Now let's get to the numbers, the really juicy stuff. For the full year, Cisco saw a 5% revenue increase, reaching $56.7 billion. This is with a full year of Splunk's results, which is a big deal compared to just 4 months last year. Product revenue grew 6%, while services revenue was up 3%. Their total software revenue jumped 21%, all thanks to Splunk. Gross margin overall was almost flat at 64.9% for the year, but product gross margin actually ticked up slightly to 63.7%. This was a win due to Splunk's contribution and some productivity improvements. However, they did face some headwinds with pricing and a charge from a legal dispute with a supplier, which dragged things down a bit. Their operating expenses as a percentage of revenue increased by 1.8 percentage points. This means their costs went up faster than their revenue growth, primarily due to higher amortization of purchased intangible assets and share-based compensation expenses. The Splunk acquisition is clearly impacting those numbers. Operating income as a percentage of revenue decreased by 1.8 percentage points to 20.8%. This is a direct consequence of those higher operating costs, and that supplier dispute charge, while revenue grew, operating profit as a portion of that revenue actually shrank. Net income actually dipped 1% for the full year to $10.2 billion. This is despite the revenue growth, and it highlights the pressure on their margins and the impact of those higher expenses. On the shareholder return front, Cisco bought back $5.9 billion worth of stock in fiscal 2025 and paid out $6.4 billion in dividends to shareholders. This shows they're committed to returning capital to investors. Inventories decreased by 6% to $3.16 billion, but their purchase commitments with contract manufacturers and suppliers increased significantly by 47% to $7.6 billion. This suggests they're planning for future demand, especially with those AI investments. Their total debt is sitting at $28.1 billion, down from $31 billion last year. They've been actively paying down some of that debt, which is generally a positive sign. Looking at their cash and investments, they have about $16 billion, which is a slight decrease from last year, but they generated a very healthy $14.2 billion in cash from operations. This is a strong sign of their ability to generate cash internally. Free cash flow was strong at $13.3 billion. This means they have a lot of operational cash flow left after accounting for capital expenditures. This cash is what they use for dividends, stock buybacks, and investments. Now let's talk about the risks, which are like the warning signs in any report. Cisco points out that their operating results can fluctuate a lot due to many factors like economic conditions, competition, and the speed of technological change. They also highlight the risks associated with the growing importance of AI, which could lead to legal or regulatory issues, even unintended consequences, like intellectual property misuse. They also mention the risk of being sued for infringing on someone else's intellectual property, which is a common issue in the tech world given how fast innovation happens. Cybersecurity is a huge concern for them. As expected, they're facing constant cyber attacks and data breach attempts impacting their own systems and their customers' systems. The proliferation of AI is also creating new and more sophisticated attack methods. They have a number of legal battles ongoing, including a significant tax dispute in Brazil regarding import taxes and penalties, totaling over $1 billion in claims interest and penalties. This is a big one to watch. They also mention patent infringement lawsuits with companies like Centripetal and Ramot. While they sound confident about winning these, the legal process is always uncertain. Looking at their balance sheet as of July 2025, their total assets are $122.53 billion, and their total liabilities are $75.4 billion, making their equity around $46.8 billion. Their goodwill alone is almost $59.1 billion, which is a huge chunk of their assets, primarily from acquisitions like Splunk. Net income for fiscal year 2025 was $10.2 billion, a slight dip from $10.3 billion in fiscal 2024. However, that dip is less concerning when you consider the massive acquisition of Splunk and the higher operating costs that came with it. So what's the story here? Cisco is navigating a complex tech landscape. They're smartly investing in AI and cybersecurity. Through strategic acquisitions like Splunk, their core networking business is facing some headwinds, as is typical for mature technology areas. But their growth in security and observability is really impressive. Their financial health seems solid with strong cash flow and a commitment to shareholders. The big risks revolve around those ongoing legal matters, especially the Brazilian tax case, and the general uncertainty in the global economy. Integration of Splunk is key, and the results so far seem promising, but it will take time to fully realize those synergies. If they can manage those risks and continue to innovate in AI and security, Cisco is definitely a company to keep an eye on. That's our breakdown of Cisco's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.